Hello and welcome to QuanX News. I'm your host Prasanna Kohli, here to bring you the latest stories shaping India's financial world. Today we'll be covering market rebound after a tough week, updates on Canada's economic concern, and special reminder for Vedanta's shareholders. We are proud to have a Quintox solution as sponsor, an innovative IT tech startup helping businesses to achieve seamless integration. Let's dive in. The India stock market bounced back today after experiencing their worst week since June 2024. The Nifty 50 climbed 0.7% to 23,753.45 points, while BSE Sensex gained 0.64 to close at 78,540.17. Heavyweights like HDFC Bank and the Reliance Industries led the recovery alongside performance from the metal stocks. The market had dropped about 5% last week, largely due to concerns over US Federal Reserve reduced rate cut projections and significant foreign selling worth of $1.86 billion. However, analysts says that this weak bounce is supported by dip buying, particularly as valuations of large cap stock have become more attractive. In sectorial movement, financial stock rose by 0.8%, with HDFC Bank leading the charge by 1.7%. Metal stock also gained as 0.9% beyond the government probe into steel imports, which could lead safeguard duties. Among the top performers, Tata Steel advances 0.7% and JSW climbed at 2.2%. These gains come at a time when global cues has been positive, thanks to lower than expected US inflation data. As always, it's fascinating to see how global trends influence our domestic markets. While India's markets rebounded, Canada's stock index, the S&P composite fell by 0.26% on Monday, closing at 24,536.69. The real estate and telecom sector, which led the declines with both 1.1% down. Investors are grappling with mixed signals from recent GDP data. Although Canada's economy grew by 0.3% in October, initial data suggests that contraction in November. It's confirmed this could be a economy may miss the Bank of Canada 2% growth projection for the fourth quarter. Adding the uncertainty, producer prices rose by 0.6% in November, driven by the lumber and petroleum products. On the brighter note, the healthcare sector surged by 2.3%, with Trilly brands soaring 10.1%. Another standout performer was Payfair, which is climbed at 80% after US FinServ announced its acquisition for $201.5 million. While Canada faces growth challenges, this individual story shows how there is always room for innovation and resilience, qualities that remind us of our sponsor, Quintox Solution, a leader in turning challenges into opportunities through cutting edge tech. Attention, Vedanta shareholders. Today is your last chance to buy shares and be eligible for fourth interim dividend payout as 8.5 per equity share. With the record date set to tomorrow's 24th December, investors need to act quickly under the T plus 1 settlement mechanism. Vedanta share open at 480.80 today, climb at 484.70, marking at 1.5% gain. This dividend amount is of 3,324, making it a significant payout for shareholders. The company has strong dividend history, having announced three interim payouts earlier this year, totaling at 43.5 per share. Dividends are a great way for companies to reward their investors, and Vedanta's consistent track record highlights its commitment to shareholders' value. If you are looking for steady returns, it's a worthy keeping eye on such opportunities. That's all for today in Quanks News. We have covered everything from Indian market recovery and Canada's economic concerns to timely dividend reminder from Vedanta. A special thanks to our sponsor QuinTalk Solutions for supporting today's episode. They are redefining how business approaches IT and innovation, much likely the way financial markets are evolving globally. Thanks for listening. Stay curious, stay informed, and I'll see you in the next episode.